All right, good morning, everybody. Welcome to today's bi-weekly Gentian updates. Good to have you all here with us. Thank you for taking time out of your busy day and spending it with us here at Gentian over the next half hour or so. We're going to go through multiple topics. Hopefully we can add a few nuggets for you to take away there. So just wanted to say thank you very much for joining us. Great to be here with you all. Chris Doty has the day off, so you have a new MC for today. Hopefully it goes pretty smooth today. So, with fall upon us, lots to be thankful for. Crisp mornings, leaves are falling. As you know, we all like to go big right away in the morning. So before we go big, I want to give you a little update on what you can expect for today. Today, we're going to go big, of course, with all the team members that are on the call today. We're going to hear from our very own Julie Decent from the operations team about what's happening here at Gentian Financial. We're also going to hear from Zach on market updates. We're also going to hear from Michael Mann and our team as well, as far as what's happening with the portfolio and some of the conversations he's having as well. And we're also going to talk about a few planning ideas, maybe a family tradition on there on the live it side. As you know, we're plan it, live it, and give it here at Gentian. So hopefully we can incorporate a live it in there as well. If there's time, we'll get to the future loop. But with that being said, lots to be thankful for. We all go through moments in our life. We all go through tough times, and I'm very grateful for the Gentian team. I had a tough week last week with moving to the new house, and I can't say it enough that the Gentian team was there to lift me up when I was having a tough moment and a tough day. And I love you guys, and just like I love all of our clients. Thank you for being there for me. So I appreciate you all. So with that being said, I'll pass it over to, how about Julie? What are you grateful for?
Well, thank you very much, Ken. Hello, everybody. Kind of just going off of that, Ken, we're always here for you, Ken. We're here for each other. So that's what makes our team so great. So I'm actually grateful also for the great fall morning. Our back deck faces west and we have a beautiful tree line. So I was able to kind of look out over and see all the colors of the trees and just kind of sit back and enjoy my morning coffee. And it was just a really wonderful, quiet morning, a great way to start the day. So I'm really just grateful for the beginning of the day today.
Very good, Julie. Sounds like a very peaceful morning to start your day off with there. So Mike, how about you? Well, anything that you're grateful for in the last couple weeks that have happened to you?
Absolutely. So much to be grateful for, but one kind of cool thing, I'm really grateful for modern medicine and dental work. Over the last 2 years or so, a little less than that, I went under the Invisalign treatment. And for those who don't know, it's a clear retainer that's 3D printed and it slowly shapes your teeth as you put a new one in each month. And I recently finished that up. So I had an orthodontist appointment yesterday and had some good news, and we're going to taper down the appointments. And I think it's, it could be a coincidence, but getting a little bit more FaceTime with everyone now that the teeth are straight, we'll see. Hopefully it continues.
Well, Mike, your smile's looking good. Your teeth are looking great. So keep that smile going. So very good. Zach, how about you?
Thank you, Ken. Along the same lines as you and Julie as well. A lot to be grateful for, but specifically today, it's the Gentian family. For each of you that you see on here, our team, and also each of you as clients. Yesterday, I had the very humbling opportunity to work with Strategic Coach. They take business teams and team leaders from across the country and go through different planning processes and systems and business practices to really bring a better experience to each of you. And when I'm there, every time I'm working with people from across the country, it's extremely humbling with how great of a team and family and you that we have here. And every time I talk about it, I get excited, and they feel that in the sense of, oh man, you guys got something really special going on over there in Mequon. So just very blessed for each of you and to have those opportunities.
That's fantastic, Zach. Thank you very much. Thanks for attending those. You bring a lot of great ideas back to the team, and ultimately we have wonderful clients that we want to do it for. That's really the driver of all this. When we wake up, we want to do it for our clients and make sure that we're providing the best service and the best knowledge and advice and best experience that we possibly can here at Gentian as well. So I think that's everybody that's on the call today for going big. You at home as well, write a few things down. We always love to hear when you come in for your meetings. We love to hear what's going on with you and what's special in your world as well. So I'm going to cover one planning idea, then I'm going to kick it over to Zach for some great market updates as he usually does. What you're seeing right now is a lot of proposals. It's in the news right now. A lot of people are talking about it. A lot of proposals as far as tax law changes on some of the planning side of the equation that we do for you. So the planet side of Gentian is, you're looking at conversion planning. That's a big one we talk to you about if it makes sense for your scenario, of course. Conversion planning is simply taking money from your traditional IRA or traditional 401k, if you will, and converting it to a Roth IRA or your Roth 401k. That's what a conversion really is. And a lot of it is being proposed right now, a lot of chatter about it. And what we're seeing right now is some of it's based on income limits at certain levels, typically around that $400,000 to $450,000 of income. So it gets up there in retirement, if you will. But if you're working and making a great wage, it may affect you. Also, it also has something to do with whether it's going to take place, this next year in 2022. Some of the rules on the conversion planning don't even take effect, if they do take effect, actually 10 years from now. So, again, these are things that we're paying attention to and making sure that we're planning it for you and staying on top of it as well. So that's one thing on the planning side. So I'm going to hand it over to Zach here. He's going to go through the market updates and just let us know what's going on in the markets.
Thank you, Ken. Really appreciate that. And a lot has gone on in the markets in the last 2 weeks. If any of you have looked at that, if you haven't, this will be a kind of a good one for you as well. But the S&P 500 for the year is up 21.80% on the year, which actually in the last 2 weeks is up 6% since our last bi-weekly webinar. Earnings coming out this quarter have looked pretty good for a majority of companies, and there's still more coming out this week and the next couple of weeks as well. The Dow Jones is up 16.83%, or about a 4% increase in the last 2 weeks. As a reminder, the largest number as far as metrics go for these indexes is the Dow Jones. A normal monthly 3% correction is now a movement of over 1,000 points. So a normal movement of 3% is now over 1,000 points. What is the media and the news going to show us? Big flashing red letters, 1,000-point drop. That's normal. That's expected. So as the normal markets happen, you'll see the bigger numbers along with it. The NASDAQ up 18.21%, or a 5% increase in the last 2 weeks. As you guys know, it's 49% technology weighted. The Russell 2000, which tracks mid-cap and small-cap stocks for the year, is up 16.27, about a 3% increase in the last 2 weeks. On the growth side, it's up 6.58. And on the value side of small caps, 26.87. So just another great reason and why we diversify and own both small growth and small value, or growth and value in other categories as well. On the international side, measured by the MSCI, excluding the USA, up 7.17%, about a 3% increase in the last 2 weeks. Emerging markets is still down 0.53%, negative 0.53, but that's a 2% increase in the last 2 weeks as well. Kind of tying into markets and a few lessons that we've really been going through with some of our retirees that are already retired or preparing for it within the next few years. It's really looking at, can we retire with a 20% correction? If we have 20% less value with our accounts and our investments, more than likely at an all-time high right now, if we were to reduce that number by 20%, can we still retire off of that? Is a 3 or 4% withdrawal rate still available for us? And along with that is really dialing in our budget. If we're leading up to retirement, one of the best things we've heard from one of our clients is really practicing it ahead of time. Really looking at, if I can live off of this budget in retirement and I can do that now, we're good to go, right? So really just dialing that in during these times when things are good and a lot of people are just, oh, my investments are at a all-time high. Just really diving in and looking at worst case scenarios. And also, we've touched on this many times in the past, and Ken has as well, but when we have these 6% returns in 2 weeks, our account balances are at an all-time high. Just to remember not to peg that top balance, because before our investments are here, they're going to go here before they can go here, right? On the fixed income side, rates are still extremely low. On the 1 year, 0.13 treasury, and on the 5 year, 1.21. On the 10 year, 1.66, and on the 30 year, 2.09. Two really interesting facts that we wanted to take a look at today. One was from Investors Business Daily. We hear a lot of times of, everything's moving digital, everything's moving online. People don't want human advice anymore. But Investors Business Daily did a massive study recently and said that affluent US investors are slower adopters of digital tools, and over 85% prefer a human for financial advice. Around 80% prefer it for personal portfolio management, and around 80%, just underneath it, prefer human to create a financial plan with them. So we felt that that was extremely interesting, that people aren't necessarily quick adopters for the human touch side, which, and also for the one thing we look at is when you drive past a dealership right now, there's not a lot of cars there, right? So we wanted to see kind of what the inventory levels were at. US new vehicle inventory levels in September of 2019 was about 3.5 million. In September of 2020, it was about 2.3 million. And September of 21 is less than a million. So we thought that was incredible, that a $2.5 million or $2.5 million car difference in the last 2 years. And the average price of new vehicles last year of September of 2020 was around 40,000 for a new car. And this year it's over 45,000. So a 10% increase in just about a year. So with that, I'll pass it back to Ken.
Thank you very much, Zach. Great stuff on the markets. Yeah, it's great to see the markets where they're at. It's always good to have the perspective on what you're talking about. And with the human side, that was very interesting. You brought that up. And before I jump in, I give it over to Julie, because I totally forgot about housekeeping. I was so excited to get this thing kicked off. But you're right, though. We love sitting down with you. We love having the conversation. A lot of you just want to talk it out, and sometimes we answer our own questions just by talking to each other. And giving that guidance. And sometimes it's thinking about something just a little bit different than how we were thinking about it before, which can make all the difference in the world. A lot of financing questions we get about, bridge loans and financing homes and things of that nature right now. That's a big one. And a lot of you are on the right track. We just need to sometimes tweak it just a little bit and offer that guidance and our expertise. And we love doing it with you, and we love doing it together as well. So sorry, I already blew the agenda today. I jumped right into planning. But I'm going to hand it over to Julie Decent of our team, and she's going to give us an idea of what's happening here at Gentian.
Great. Thank you so much, Ken. It's all about adaptability, right? So, so thank you everyone for joining us this morning. Thank you for sharing a little bit of your morning with us. So I have just a few housekeeping items to go through. Tomorrow, October 28th already, we're continuing our Wealth and Health series with nutritionalist Michelle Norris. So she has a great topic, especially with the upcoming holidays and gathering with family and friends and all the good food that goes along with that. Her topic tomorrow is how to stay healthy and avoid the holiday weight gain. So there's still time to register for that. We'd love for you to join us. So again, that's tomorrow at 10 a.m. Central Time. Sunday, as you know, is Halloween. So enjoy all those trick-or-treaters that are walking through the neighborhoods. Drive carefully through the neighborhoods, because I'm sure there'll be some kids running in and out of the street. So enjoy that. Big shout out to my daughter-in-law, Jane, who has her birthday on Halloween. So I hope she has a spectacular day. So and then upcoming for this November, upcoming in November, we have our Gentian Book Club. It's our first one. So it will be a virtual book club. That's going to be November 15th. So we are featuring a book by Arthur Brooks called Love Your Enemies. So it's a great book. Plenty of time to register still. And when you do register, you will have the opportunity to choose, thanks, Mike, the opportunity to choose the format of the book that you'd like, whether you'd like paper, audio, digital. So make sure to register in enough time to get your book. And then we're going to kind of tackle the first couple chapters of that book. So again, that's November 15th at 11 a.m. And then just one final reminder, the fourth quarter review appointment invites are going out, so watch for that and sign up for a time that's convenient for you. We are still offering Zoom, so you have your choice of Zoom, phone, or in person if you're comfortable with that. So we look forward to seeing you at those appointments. So that's all I have for today, so I'll hand it back over to Ken.
Oh, fantastic, Julie. Thank you so much for giving us the update here at Gentian. The ladies in Gentian program is really, really getting bigger and bigger. I feel like more ladies are showing up to that of our clients. We love it. We love having you there. I know the ladies did a great job. Zach did a great job with time mapping, I think, with this last one, and a lot of good feedback. So You know, if your family and your household gets one email, and sometimes it goes to one of the spouse or the other. Sometimes the other spouse doesn't know that these things are happening. So by all means, share your emails. If we need to add an email to your account, we certainly will to get you involved in those programs, because we love having you there, and the ladies do a great job here at Gentian hosting those. So thank you very much for that. So yeah, with that being said, you know, a lot to be thankful for here. A lot of stuff going on. Zach did a great job on the markets. What we're going to do is we're going to hand it over to Mike right now, and he's going to give us some portfolio updates. So when we're not necessarily meeting with you in meetings face to face, what are we doing? And here's going to be a great example of what we do behind the scenes for you.
Yeah, absolutely. Thanks, Ken. So actually in the last 3 days, I've had 3 meetings, another one today, one coming up on Friday as well, and we're going to ramp up into the next week. A lot of the fund companies that we work with have been getting their Q3 reports in, and now's the time to discuss with them and see what's going on within the individual mutual funds and the markets as a whole. So we have kind of had our conversations swirling around what they see going forward. And before getting into that, I do want to bring up that the mutual fund companies are starting to release their capital gain information. So that's the year-end estimates of the distributions that they'll make that you'll have to pay taxes on in some way or sense. And so we will be taking a look at each individual situation with that, and those with large taxable accounts be proactive in bringing you that information on the distributions you may be able to expect at the end of the year. But with that, some of the market things that they have been talking about and we've been talking about, and kind of piggybacks right off of what Zach said with the new car prices, inflation, it's here. It always has been. I mean, you know, we talk about a historical inflation rate of being around 2%, a little higher right now, but you know, we can expect it to continue to go up. It was thought to be transitory, but it looks like it's going to be here for a while. So what exactly happens with that? Who tries to mitigate the effects of that? Well, you know, a lot of people talk about the Federal Reserve, and so raising rates is a way that they combat inflation, but it's not predicted for them to raise rates until 2023, as they're trying to keep the economy going, keep it stimulated. And so what they are doing right now is something called tapering. And tapering is different than raising rates. What tapering is that currently the Fed every single month is buying $140 million of mortgage-backed and treasury securities and putting it into their inventory. And essentially what that does is keeps the interest rate low so that it stimulates the economy. We can get money at low finance rates and be able to spend more. And what they're doing is that they're starting to buy in November, they're starting to buy less each month. So they're going to taper back by $15 million every 6 weeks, starting in November. And by the mid next year, that tapering should bring up that artificially deflated interest rate back to normal levels, which we're looking at being around 2.2 for the 10-year treasury by mid next year is what's being said right now. And then looking into 2023 is when maybe they'll look at raising rates depending on where the economy's at that point. So that's one of the cool things about these discussions, is that it's not just pertained directly to a single security or mutual fund. It's talking about the market as a whole, and that allows us to be proactive and plan for those sort of things and bring that information to you. The last thing I want to talk about is student loans. It's a very relevant conversation right now with kind of everything that's going on, the potential legislator, different things that might be coming out for that. And so I've been having more and more conversations, and we in general have been having more and more conversations of what to do with the student loan debt. And truly, there isn't one answer to all the questions. It kind of is based on anybody's particular situation. So if anybody has anyone that they know, friend, family, who have student loan debt, who's stressed out about it, who wants to know more about what's going on and be prepared for January, the end of January next year, when that forbearance period ends and federal student loan repayment begins, give us a call. I mean, we're all people who keep up on these things and take a look at it, and we have strategies in place. So myself and anybody else on the team is happy to talk about that with you. And with that, I'll send it back to Ken.
Thank you, Mike. Very good stuff there. Thanks for a great contribution to the team and benefiting our clients ultimately as well. So that's fantastic. So
hey, Ken, in Chris's honor, I have to share one dad joke, and I'm probably gonna have to do some deep self-reflection if I'm coming out of nowhere with a with a dad joke, but this is specifically for Chris because he always has some good ones. But
Okay.
for those of you with grandkids or kids, which bear is the most condescending? A panda. And I'm gonna have to review that one, but that's for Chris. Hopefully you guys can use that with your grandkids as well.
All right, Zach, that was good. So I'll piggyback on that in honor of Chris as well. So in the Halloween spirit here, you know, what does a skeleton say when dinner is served? Bon appetit. All right, with that being said, we gave a shout out to Chris there. We miss you, brother. You know, we look forward to having you back as on the next one, hopefully as well. So, you know, Mike brought up something really, really important about inflation. That's a very, very serious topic that a lot of us talk about. And a lot of you talk about with us. You know, you come in, you talk about inflation, what's happening. You know, when you look at the Social Security increase of 5.9% next year, you know, that tells me a couple things. Number one, great for a lot of people who are collecting Social Security and getting that bump. It's a very much needed thing right now. CD rates that people live off of, bond interest rates that people live off of, not so high right now. So that extra increase in Social Security next year will help a lot of people out. What it tells me though is if Social Security is coming out with 5.9%, the inflation rate is probably much higher than that. Because how they factor it out is they typically strip out energy, housing, and food. And that's really the three core things that we consume every single day in our lives. So maybe the inflation rate may be 7, 8, 9, 10%. I'm not quite sure what the number is. And I'm not sure anybody knows what it is. But if you go to the grocery store, as a lot of you do, you know, you take a look at prices and you're starting to notice that they're more than just 5.9% increases on certain items as well. So again, that's why we own what we own in the portfolio as far as stocks go and great companies. You know, as things inflate up, companies inflate up as well. You're starting to see that from earnings like Zach mentioned as well. So one of the things that we do hear from time to time, not you all on the phone call today, but some of you, you know, we get a little antsy at times when the markets are doing well and hitting all-time highs. You know, can it go higher? Why can't it go higher? It can't go any higher. It's going to go lower. We hear all these things from you and people in the community. And sometimes it gets us to be thinking about, should we change our strategy? And the answer is no, not at all. And I'm going to show you a chart. It's one visual that I like to share with you guys right now. It really is the history of the stock market. You've seen some of these before in our review meetings, but it's a good thing to touch on right now. And here's why. When I take a look at this, this was probably the last big upturn that we saw was the 80s and 90s. Okay, as highlighted in the chart here. This is the S&P 500 as far as the index goes and what it did over a period of time. I call this a trip down memory lane because you can kind of put yourself in these different time periods of what you were doing, you know, with your careers or families or whatever the case may be. But the stock market was happening. And imagine this, imagine if, you know, we're hitting all-time highs right now. But imagine if we would have had that same philosophy of when we hit an all-time high, let's do something different. We would have missed out on quite a few years, 20 years to be exact, of hitting all-time highs. And so I'm not saying that that's going to happen going forward because no one can predict the future, but if we use history as a little bit of a guidance here and to offer some perspective, these are the moments we need to be used to the markets hitting all-time highs. It makes investors really uncomfortable and rightfully so, because everyone's waiting for the shoe to drop. So just keep that in mind. We don't want you to change your strategy. We need you to own great companies, you know, for a portion of your wealth. We have your risk tolerance figured out with you, but we need to grow your money to make sure we keep up with inflation, make sure we keep up with taking money out of our portfolio when we're in retirement as well. So just wanted to share that visual with you, just to offer some perspective for the last, you know, that time frame of the 80s and 90s when we were hitting all-time highs. Now we're going to have some bumps in the road, of course, as you all know, but that's all part of using the tool of the stock market to make money to grow our wealth as well. So, you know, there's a few things going on in the headlines. The supply chain, the bottleneck there. You know what that does? Everyone knows that there's cargo ships in the ocean. There's a huge containers waiting to be unloaded. Cars are delayed, like Zach mentioned. You know, cars are chips are being waited, tried to put in the cars. Everyone's waiting for that right now. But what it does to a supply chain, as we talk to our clients who are in this business and help their companies out in this area, is that it forces them to take a hard look at what's going on. It makes them look at their own company to say, okay, are there inefficiencies here, and can we make that better? And so you're going to start seeing technology be used more and more in the supply chain management of their own companies to make their company more profitable and more efficient going forward as well. So yes, it is a little bit of a negative right now because everyone's waiting for something. If you ordered something that's 3 or 4 months away, you can't get your hands on it. But again, it offers that opportunity for growth and more research going on there as well. So I just want to thank you guys for your introductions. You guys have been phenomenal to us. Thank you so much. If there's anything that we can do to make your life easier, please let us know. We're here to do that for you. But we do thank you for your introductions to your family, your friends, your coworkers. A lot going on there. A lot of decisions to be made with benefits these days as far as companies eliminating retiree healthcare programs, eliminating pensions. A lot going on there. So on the live it side, I just want to touch on this. I know Chris is really good at this side. But when you think about the holidays coming up, you think about Halloween, you think about Thanksgiving, and Christmas and things of that nature. You know, family time comes into play there. Traditions come into play. And so, you know, what binds us as families together? It's getting together, yes, but it's also that special thing or things that we do when we are together. And that's the family traditions. And that's something that's really unique to each and every one of your families. You know, I heard recently from one of our coaches for Thanksgiving. I thought this was really neat. I want to share it with all of you, is that during Thanksgiving, you put a white tablecloth out on your table. And if you're anything like my mother-in-law, she'll iron it first before she puts the tablecloth down for that perfection, right? But what you do is you put your hand down and you get a marker out and you actually trace your hand on the tablecloth, and inside of your hand, you write what you're grateful for. And I think that's a really unique thing, because if you do that if you do that year after year after year, you're actually going to look back at that tablecloth and be like, huh, that's what I was grateful for that year. That's fantastic. And things change and we grow. It's also fun for the grandkids just to trace their hands too, and to see what they're grateful for as well. So, you know, that's on the live it side. Just think about your traditions inside of your family. If there's ones that you want to share with us that we can share with other people that you think are really great and really binds the family over the years, please share those with us. We'll do the same with you as well. So with that being said, you know, when we talk about, you know, the last 20 years of the markets and the next 20 years, there's a lot to be hopeful for. I'm going to bring in a little future loop here, a little technology here to end it with you all, just to kind of keep suit of what Chris does here. When you think about future loop, you know, future loop is the daily and weekly updates we get from some of the best thinkers in the world on what's happening on the technology side. So, you know, Cisco, great company out there, launches a WebEx hologram, basically, you know, an augmented reality hologram. It's like a version of you in a room with other people that look like themselves as well. So you're able to function and almost see each other as far as collaboration goes. You know, Zoom is interesting, but when you can kind of see it in a 3D and you can see people moving around and where they're sitting and how they're, you know, what they're wearing maybe, and or maybe what they're not wearing. You know, you have that aspect going on as well. This one's really interesting for a lot of us. Texas researchers discover a way to turn fat cells into energy burning cells. That's a really interesting one, you know. So you know, we'll see how that progresses as we go here. So maybe that can help. You know, America has you know, a struggle with obesity. It's very known with all the foods and the processed foods that we consume. But maybe this can really help turn that around and get that moving in the right direction. So you know, there's interesting ones about researchers develop a concept to make rocket fuel on Mars with all the space exploration going on, landing on different planets. There's just so many different things going on that the great leaders of some of these companies are heading and spearheading for all of us to see what the future can really look like. So just a couple of things to be hopeful for the future, because everyone says, oh, what's coming next? But if you really like the last 20 or 30 years, you're really going to like the next 20 or 30 years. And that's from a market standpoint. That's from an investment standpoint. Now, from a people standpoint, it's hard to say what's going to happen, right? It's really hard to say, you know, is this going to make us better? Is it going to make us worse as humans? That's always the great debate. But from an investment standpoint, you know, there's a lot of great things going on to give you hope for the future to see what that really looks like. So with that being said, our whole team is thankful for you all that's on the call today. If you're going to listen to this later, we invite you to do that. We are Gentian Financial. We are here to help you plan it, live it, and give it, and inherit it in cases. And so with that being said, we wish you a great day. We wish you a happy Halloween. Have a great time with the families. And we look forward to seeing you in 2 weeks from now. Thank you very much.